Hey everyone, BigBear.ai CEO had some pretty interesting things to say following the company's latest quarterly earnings release. So in this video, I'm going to go through those latest comments and discuss what they could mean for BigBear.ai stock investors. So let's jump right into these details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right. BigBear.ai CEO saying that after joining in October of 2022, I spoke openly about needing a foundational year to overhaul our operating structure, wind down contracts that didn't meet our business objectives, reset strategic priorities of the company, and manage uncertainty in a volatile macroeconomic and geopolitical environment. In short, we had to do the hard work to get our house in order. Yeah, that was initially the big picture plan, is to right size the company, change up the structure of these contracts. This wasn't unique to BigBear.ai. Many of these younger companies starting out signed contracts to secure sales without understanding or without really trying to maximize the unit economics. They were thinking, who cares about losing money on the bottom line? We just want to focus on growth. Let us secure these contracts, and then later on, we'll think about profitability, we'll think about cash flow, right? New CEO came in and said, no, you know what? That doesn't work anymore. Interest rates are not 0% anymore. Money is not free. We need to focus on optimal growth. We need to focus on optimizing business. And to the CEO's credit, they did achieve that target, right? In the second half, as we'll see, in the second half of 2023, they were cash flow positive. That's a huge accomplishment. So kudos to CEO and the management team at BigBear.ai for making that huge transition. With the completion of the Pangiam acquisition and incremental cash proceeds of approximately 54 million from warrants that were exercised in the first quarter of 2024, we are well positioned for healthy growth in 2024 and beyond. So these changes that the company made throughout 2023 and early in 2024 have put itself in a good position for the current year. Although when we look at the forecast for 2024, it's a little bit curious that the growth and the adjusted EBITDA were a little bit underwhelming, and we'll see that a little bit later. But it could be a conservative guidance from the new management team or from the current management team, but because of the acquisition, they don't quite know how they're going to digest the acquisition and the impact it's going to have early on. So we may see this guidance get upgraded as the year progresses. Certainly, BigBear.ai stock investors are hoping that's the case. Like I mentioned earlier, the company achieved positive cash flow in the second half of 2023, also positive adjusted EBITDA in the second half of 2023. But the CEO noting that Congress has not yet enacted a full budget for fiscal year 2024, and that causes significant uncertainty for their federal clients. Going on, the CEO says BigBear.ai demonstrated object detection from full motion video as well as descriptive and predictive analytics. These types of accomplishments are making BigBear.ai's services valuable to the Navy's AI task force, and the company secured an extension of a contract with the Navy. So that's definitely good news, not only because it gives BigBear.ai some revenue, but it also signals to other enterprises that BigBear.ai is a company worth doing business with. If the US government, if the US Navy trusts BigBear.ai, then it's probable that their services are valuable. So more companies could give BigBear.ai an opportunity to show what they can do, the value they can add. So that's really good news for BigBear.ai. They also signed the deal with AWS ProServe. Customers can now access the power of BigBear.ai's Pro Model warehousing solutions, including optimized facilities design, streamlined process workflows, efficient staffing models, and strategic resource allocation. And given that warehousing is becoming more critical to the economy worldwide, so much more sales are happening online, and that needs warehouses to support fulfillment and logistics for online. This is becoming a critical component and could fuel some sales for BigBear.ai. The partnership is early days, so I'd like to hear more about this as the year progresses in 2024, but definitely something that BigBear.ai stock investors can look forward to. So, Pangiam is a market leader in digital identity and brings government services, facial recognition, image-based anomaly detection, and advanced biometrics to their portfolio, expanding the value they bring to their combined customers and partners and increasing their footprint internationally. So the acquisition gives BigBear.ai a growth outlook, right? It expands their services, expands the products, and expands the regions they serve. So that's going to incrementally add revenue and add to growth for BigBear.ai, which is something they needed. Remember, in 2023, they had essentially zero growth. So with this acquisition, they can grow, albeit inorganically. Still, it can fuel some growth for BigBear.ai. And given their forecast for 2024, which I'm going to talk about here, 2024 revenue guidance of 195 million to 215 million would be nice growth from the roughly 150 million the company demonstrated in revenue in 2023. So they are expecting growth, although investors were a bit disappointed that they're not releasing adjusted EBITDA guidance, especially because, like the company mentioned earlier, they were positive adjusted EBITDA for the second half of 2023. So investors were hoping for at least BigBear.ai to say that they're going to be positive adjusted EBITDA for 2024. At least say it's going to be above zero. At least say it's not going to be negative. By not saying anything, by not giving any guidance, it put a little more uncertainty and a little bit more caution for BigBear.ai investors, thinking, could it be that once the acquisition, now that it's complete, it's actually going to be not positive for adjusted EBITDA, meaning that while the company digests Pangiam, their adjusted EBITDA could go negative again for a few quarters, maybe all year. And so it's raising a lot of questions, and that's one reason why the stock price fell by more than 20% after the company announced their latest quarterly earnings results. But management saying that 2024 is off to a great start for BigBear.ai, and they're staying focused on the mission. So really interesting comments here from the CEO, and this is one company I'll certainly be following closely in 2024. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.